Hello, it is Ed Butowsky with ChapwoodFinance.com, and I'm honored to have a Wall Street legend, Bruce Krasting, as my guest today. And Bruce has been on the street for, 25, 30 years, and is very well known to many people out there. And Bruce, first of all, thank you for joining me today.
It's a pleasure to be here, and thank you for that introduction.
And what I'd really like to focus on, you write a blog, and people should go out and find that blog because it's excellent. And what drew me really to you was your perspective and your insight that most people on the street today just don't have. And I want to focus in because your background, among many things, is in the bond market and the high-yield bond market. With interest rates starting to rise, and today we saw the 10-year Treasury go to 2.06 early on, give me your impression about what's happening in the bond market and how the corporate bond market and high-yield bond market differs from the U.S. Treasury bond market.
That's a lot of questions. In terms of the bond market, I think that all you need to do is look at the tips today that are telling you that the inflation expectations are around 2.56%, 2.6%, and we have the long bond at 204. Would you apply that? You're guaranteed to lose 0.5% per annum.
Okay, now explain that in detail, because a lot of people watching right now want to understand exactly what you just meant, but they don't have the background that you do in this business. So what does that mean?
If I pay you $2 on a $100 bond or something like that, and that $2 is not worth much at the end of the year, you're losing money. So with inflation at 2.5% and income at 2%, you're assured to lose money over time.
Meaning purchasing power as well, right?
You're in purchasing power, yes. I mean, on a balance sheet basis, you're not losing money. But in terms of what is the value of your money worth, it's going down every week, every month, every year in the bond market today. And if you look at the corporate bond market, you have a variety of different spreads. But let's take, top of the line, something like IBM that trades a fraction over governments. It's the same argument. IBM is a fine credit. It's not going bankrupt. You'll get your money back, but you'll be a loser against inflation over time with a high-grade bond. And then you have lesser quality bonds all the way down to junk. And to me, I think you're taking an equity risk today in high-yield bonds, and you're not getting paid for it. So if you want that, you might as well just buy the common stocks rather than play in junk bonds, in my opinion. They're priced poorly. 5% doesn't play.
What kills me, Bruce, is I see a lot of people, as you know, and that I see a lot of people who are investing in bond funds today. And I remember back in 1994, and I'm sure you do as well, when interest rates started to rise, a lot of these people didn't understand how much risk they had in bond funds. How do you feel about bond funds today?
It's a guaranteed loser. It's a guaranteed loser. Again, I think you're going to lose money versus inflation. I'm certain over time you're going to lose money as interest rates rise and the value of bonds go down somewhat. And so I just see it as a poor investment category. If you must have, something stable and cash, go ahead, buy some treasury bonds. But it is just wallpaper, and it's never going to be an upside. And investing, I think, is about an upside. If you want to talk, let's protect the downside, we can talk to that. But I prefer to say, how do we make the upside?
Yeah, I without any question at all. And people have this perception that bonds don't have any risk to them. And people, and it's just absolutely ridiculous. And people just need to gain a better perspective and knowledge. Now, it was different when, many years ago when you were managing money and you had a hedge fund and you were managing money at some of the biggest firms on Wall Street. Interest rates were dropping, and you were telling me at one time something about a deflationary environment. That's good for bonds, correct?
I was speaking of a time from 1990 to 1994 when I was very active in the bond market, and it was one of those perfect periods where every month bonds globally ended up higher. And if you were long, you made a tremendous return because of the leverage that was available. I think the same can be said from the period from 2008 to 2012. Bonds were the place to be if you wanted to make a capital gain. They appreciated substantially in price. The question is, now that they're very price rich, and 5 years later, is it still the right place to be? And this gets back to a fundamental question, which I ask everybody. Can you be a buy and hold investor? The answer is I don't think you can. There's times to be long gold, long bonds, long stocks, long real estate, and there's times not to be long those things. And that's the hard part of investing. There is no one cookie cutter approach.
Right.
You have to be flexible, or allow people to do the investments for you who are flexible, which is what I think has to be, for the moderate-sized investor, under $500,000. I think it's impossible to manage your own money successfully.
But it's also just as difficult to find credible people to manage your money, which is a whole nother discussion we should have one day.
Ed, you're damned if you do and you're damned if you don't.
Right.
The challenge of finding where to put your money is very tough. I think those that fall back and say, "Oh, I'll just buy S&P index funds," you need a stock picker. You have to be a stock picker today. I mean, and if you're not, you have to rely on somebody who is.
And that's exactly why we built this site, chapwoodfinance.com, because our goal with this is to have people like you explain exactly what people should do with their money versus just news and quick little news clips here or there. Really give information that will help people manage their money better. That's the goal of this site. And Bruce, I look forward to having you back on again real soon and give your perspective. And hopefully we can do this every week. But I really appreciate you joining us.
It's a pleasure talking with you, and I would love to talk with you more. You've got my number, call me.
Absolutely. And how can people find you? Because you have one of the best blogs out there.
Thanks. I'm Bruce Krasting. You can Google that name, or just brucekrasting.com is my website.
Great. Thank you very much, Bruce. I appreciate it.
Thanks, Ed.